Hello everyone, PS from PS Invest Plays here today. After its IPO in early 2021, AFFIRM Holdings stock had risen 75%. But after its Q3 earnings report and the announcement of Amazon deal, its stock has shed 13%. Has the stock peaked? Or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliot wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. AFFIRM Holdings, ticker AFRM. AFFIRM Holdings is a fast-growing financial technology company that enables consumers to buy goods online and pay later. AFFIRM provides microloans to users at the point of sale with participating merchants, such as Walmart or Shopify, with an aim to provide a quick, transparent, and more inclusive lending alternative to credit cards. The company was founded in 2012 by Max Levchin, also the co-founder of PayPal. AFFIRM deals with both consumers and merchants, and thus generates revenue from both of them. AFFIRM has two main sources of revenue. The first one is interest charged from consumers, and the second one is fees charged from merchants. The other sources are virtual card network fee, servicing fee, and gains on loan sales. So AFFIRM reports revenues from 5 defined buckets. Merchant network revenue, which is 44% of total revenue. Virtual card network revenue, which is 6% of total revenue. Interest income, which is 37% of total revenue. And gains on sales of loans, which is 10% of total revenue. And finally, servicing income, which is 3% of total revenue. Merchant network revenue consists of merchant fees. Merchant partners or merchants are charged a fee on each transaction processed through the AFFIRM platform. A portion of merchant network revenue relates to affiliate network revenue, which is generated when a user makes a purchase on a merchant's website after being directed from an advertisement on AFFIRM's website or mobile application. Virtual card network revenue facilitates transactions through the issuance of virtual debit cards to be used by consumers at checkout. When consumers use this virtual card, AFFIRM earns interchange revenue. Interest income. Income which is earned on the simple interest loans from originating bank partners. Interest income on a loan is accrued daily based on the finance charge disclosed to the consumer over the term of the loan based upon the principal outstanding. Gains or sale or loss on sales of loans. This revenue component fluctuates depending on the expected performance of the loans and their carrying value. When a loan is sold to a third-party loan borrower, the unamortized discount is released in full at the time of sale and recognized as part of the gain or loss on sales of loans. Servicing income. Servicing fees are contractual fees specified in our servicing agreements with third-party loan owners that are earned from providing professional services to manage loan portfolios on their behalf. According to a recent report by eMarketer, global online sales grew 25.7% to approximately $4.2 trillion in 2020 and are expected to grow to approximately $7.4 trillion by 2025. Currently, e-commerce only accounts for 17.8% of total retail sales, which is also expected to increase to 24.5% of total retail sales in 2025. consumers increasingly prefer more flexible and innovative digital payment solutions over traditional credit card payment options. According to WorldPay's 2020 Global Payments Report, Buy Now, Pay Later, or BNPL, is the fastest growing e-commerce payment method globally. In North America, BNPL market share is expected to triple to 3% of the e-commerce payments market by 2023. In other regions, such as EMEA, BNPL already accounts for almost 6% of the e-commerce payment market and is expected to grow to almost 10% by 2023. Like any market, the BNPL space is also highly competitive. Affirm's primary competition are legacy payment methods such as credit and debit cards, provided by Citibank, American Express, Bank of America, etc. Additionally, it faces competition from technology-driven solutions by payment companies such as Visa, MasterCard, and so on, and from mobile wallets, example, PayPal, and from other pay-over-time solution companies such as Afterpay, Klarna, and so on. But Affirm's business model benefits from self-reinforcing network effects, which strengthens with every transaction and should fend off competition. Furthermore, its expertise in sourcing, aggregating, protecting, and analyzing data has been what management believes to be a core competitive advantage of its platform, which distinguishes it from competitors. Following are some of the growth areas which can provide additional revenue streams for Affirm Holdings. The first one is partnership with Amazon and Target. In late August 2021, Affirm announced a new partnership with Amazon, which could unlock new growth opportunities. As Amazon serves over 300 million active customers worldwide, the partnership will expand Affirm's total addressable market significantly. New product offerings. In February 2021, Affirm announced plans for the Affirm Card, the first US debit card that will allow customers to make installment payments on any purchase at any merchant. Expansion through acquisitions. Recently in 2021, Affirm completed the acquisition of PayBright, Canada's leading buy now, pay later providers, and Returnly, a leader in online return experiences and post-purchase payment. Customer retention. Affirm has also shown good merchant retention. Its dollar-based merchant expansion rate has consistently exceeded 100% since 2016. Sustaining this value proposition should allow Affirm to continue expanding revenue from existing merchants. As we can see in the chart on the left, the flow of funds in Affirm's ecosystem starts with originating bank and merchants that enable consumer purchases. Over the years, Affirm Holding has been innovating continuously. In 2013, it launched integrated checkout. In 2016, it launched virtual card. In 2018, it launched split pay. In 2019, it launched marketplace. And in 2020, it launched a savings account which was FDIC insured and interest bearing. In its fourth quarter 2021 earnings report, GMV, gross merchandise volume, active consumers, and revenue increased exponentially. Now, Affirm does have few risks. The first one is that besides growth drivers, it has merchant concentration risk. Its top merchant partner, Peloton, contributed 20%, 28%, and 20% of total revenue for 2021, 2020, and 2019 respectively. Also, its top 10 merchants represented 25%, 35%, and 30% of total revenue for 2021, 2020, and 2019 respectively. So AFFIRM needs to diversify this risk as quickly as possible. I think management is trying their best in this regard, as in its fiscal fourth quarter press release, it mentioned that in fiscal 2022, AFFIRM expects gross merchandise volume or GMV to grow faster than revenue as the company's GMV mix shifts towards shorter duration, split pay volume, and the volume coming from longer duration Peloton financing deconcentrates. In November, AFFIRM reported the company now has an exclusive deal with Amazon. The deal comes with some major catches for AFFIRM. The deal is only exclusive until January 31st, 2023, and AFFIRM had to give Amazon a load of warrants, including some with a penny exercise price to close the deal. The warrants are as follows, with various vesting dates and restrictions due to performance obligations. 7 million shares at an exercise price of a penny. 15 million shares at an exercise price of $100. Due to this deal with Amazon, there was knee-jerk reaction and the stock has been falling since then. I think it is overblown. I see this deal as excellent mechanism to expand their business and create dominance in BNPL space and move away from Peloton. AFFIRM is seeing a small increase in the number of its borrowers fall behind on their loans. Specifically, 96% of the company's loans were considered current as of the end of June, down from 97.6% as of the end of 2020. It is not a big concern to AFFIRM's loan portfolio, but it is a concern given that the economy is supposed to be on the mend and unemployment is falling. Looking at the financials for AFFIRM Holdings, revenue, gross profit, EBITDA, net income, EPS or earnings per share are excellent. At a cap of $39.9 billion, AFFIRM currently trades at around 27 times sales on a forward basis, considering estimates of $1.6 billion in fiscal 2023. Certainly, this is not cheap by any means, but it is important to take growth rates into account when comparing AFFIRM to its peers. For instance, PayPal and Square are trading at a more favorable valuation, yet are growing at a substantially lower rate. After all, Square acquired Afterpay for $29 billion, while Afterpay is currently generating less than $1 billion in annual revenue. At the same time, Swedish fintech firm Klarna has reportedly raised money at a $46 billion valuation. Nevertheless, it is unlikely that AFFIRM's valuation will expand further in short term, which could put downward pressure on shares in the short to mid-term. This is also indicative in the charts, where I see the stock price to see further correction but then increase considerably in the next 2 to 3 years. Finally, AFFIRM continues to increase market share in the BNPL industry, which is quickly gaining momentum as personal finance is changing drastically. While shares are trading at an EV/LTM ratio or revenue multiple of roughly 46 times, I think that the favorable macroeconomic outlook, growing consumer preference towards BNPL, and the company's strategy of increasing merchant partner network coupled with new product offerings will further provide upside potential. Now, let's take a look at the chart of AFFIRM Holdings. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's continue with our analysis. Looking at the chart for AFFIRM Holdings, the bull run that started in early 2021 is still not over. It has completed its first 3 waves and wave 4 is currently in progress. Wave 4 is typically 38.2% or 50% retracement of wave 3, which should bring the price down to as low as $118. I see strong resistance at that price and strong support around $100.60. After this retracement is completed, I expect wave 5 to resume. Wave 5 is typically 161.8% retracement of wave 4, giving us a price target of $210.80, which translates into a 100% profit in the next 2 to 3 years. Now, let's summarize. As I said earlier, waves 1, 2, and 3 are completed, and AFFIRM Holdings stock is currently in wave 4 correction. At its current price, nibble any pullbacks and accumulate corrections. For me, the accumulate range is around $118.23 and $100.60. This to me offers strong resistance and strong support for AFFIRM Holdings. After this correction is completed, I would recommend that you hold it for the next 2 to 3 years, as I expect a price target of $210.80, which translates into a 100% profit in the next 2 to 3 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.